Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look again on the gold market. So in general, the trading plan that we have created recently has worked nice. Market has reached on stunning consumer spending numbers, 1810 level actually. That's what we would like to. And now let's show some response. But here exists some, I would say, few possible ways how you could deal with the gold market right now. First of all, on the daily chart, we have two important moments that could help us a lot for the decision making. In general, we are still watching for the XOP, and we said that downside action should not be too strong and should definitely remain inside of this recent upward swing. Because in the case of market will drop outside of it, it will be not normal price behavior. It will be irrational behavior for the bullish market. And this will be absolutely different discussion in this situation. But meantime, while market stands inside of this swing, we're still aiming on the XOP target. At the same time, recent data was rather strong, and as a result, on the daily chart, we've got bearish reversal candle. Usually, not always, of course, but very often, as a rule, I would say, the bearish reversal candles leads to some continuation. Whether this will be minor or stronger, but it probably could happen. And keeping this in mind, it seems that, for instance, market could retest this recent consolidation. It's around 1798, 18 even area, if you remember. It was rather strong resistance previously. We are coiling around it for 2-3 weeks, if you remember, standing around, and we just, if you remember, just were waiting when market finally starts to break it. And this consolidation theoretically could be retested because of this strong downside momentum currently. Second moment is take a look, market stands very close to the MACD predictor. And today is Thursday already, and take a look, it's today or tomorrow, you start flirting with it, maybe making some spikes down here, turning right back up. Other words speaking, appearing of the bullish grabber, it might be particular the pattern that we would like to get. And in this case, it gives us a lot of confidence that we could safely take the position and be prepared for upward action taken out of this step. That's two moments that we're interested in on the daily chart. On the intraday charts, we have ABCD pattern. Oral double repo action was a bit choppy, it was a bit spiked, you can see here. But more or less, it has led price right to the level that we discussed. Take a look with this ABCD. OP target has been hit. This is conference support. This agreement. And market also has chance to start upward action right from here. But with a strong sell-off on the background, with a reversal candle on the daily chart, and with the MACD in mind, we also could consider an XOP level. This is target, as you can see, that makes an agreement with the 1799 area. That's actually thing that we also want to get, because if market will touch somehow 1799 simultaneously, it could form the grabber and actually retest the previous consolidation. So that's also could happen. In these circumstances, you could keep an eye on different scenarios how to possess yourself. You could try to take position right here, based on the pattern that I will show you a bit later, with the placing stops initially below this area. If this starts to work and market starts to reverse right from here, not dropping below and reaching XOP, that's great. You'll get the position. Once market starts bouncing, you move stops to the break-even and see what will happen. Alternatively, you could do nothing. Just wait when the market hits the XOP. Then you're taking a look at the daily chart. If some patterns will be formed here or on the daily, we will get the grabber. All the better. You could try to take position right from this level. But if market will turn up earlier, right from the confluence, you just will not get any position. You'll miss the upward continuation. Here, if you'll take a look at the hourly chart, this bullish reversal pattern is forming, which is the butterfly buy. It's around OP. Gold has the habit to wash out the traders who placing two nearest stops right below the OP. And forming the butterfly, you grab the stops below it and then reverse up. That's also possible. So for position taking, if you intend to buy gold around the conference, you could keep an eye on these two targets of the butterfly. It's 1810 or 1807, stands very close to each other, and use this pattern for position taking, with the placing stops somewhere below the 161 extension of the butterfly. That's what you could use for trading on the gold in the short term. So as I said, two possible ways. Taking the position around the current level, using this butterfly with the placing stops somewhere below this area or below, what would be better, below this level, or do nothing and wait that maybe gold will reach the XOP, because we have some bearish patterns on the high time frames that tells us that it is possible. And this is a more conservative approach that you could follow. Do not to hurry up with the position taken in the conference and wait for an agreement area around this level. So that's our view on the gold.